Good morning, friends. Today I want to talk briefly about the stock market. The stock market is like a big store where people buy and sell tiny pieces of companies called shares. When you own a share, you own a small part of that company. Why it matters is companies get money to grow and make things. People can earn more money over time by owning shares. But remember, prices go up and down, sometimes fast. That means you can make money, but you can also lose money. It's not a game, it needs careful thinking. What is the stock market? The stock market is a place where people buy and sell shares of companies. When you buy a share, you become a small owner of that company. Companies sell shares to raise money, and investors buy them to earn profits if the company's value grows shareholders. A shareholder is a person who owns a small piece of a company. That small piece is called a share. If you own shares, you help the company by giving it money to grow. Shareholders can vote on big company decisions, like choosing leaders, share in the company's profits when it pays dividends, extra money, sell their shares later to someone else. Being a shareholder also means risk. If the company loses money, the shares can become worth less. Example, if you and friends buy parts of a lemonade stand, each of you is a shareholder. You get to help decide things and share the money the stand makes. But if it doesn't sell lemonade, you might lose money. Imagine a pizza shop. A company needs rupee 100. 10 friends invest rupee 10 each. Each owns a small part called a share. Why companies sell shares? Companies sell shares because they need money to grow their business. Instead of borrowing money from a bank, they invite people to invest by buying shares. Raise money, build factories, hire workers, grow business. Example, imagine a toy company wants to build a bigger factory, but it needs rupee 10 crore. Instead of taking a loan, it sells shares to the public. Thousands of people buy these shares, giving the company the money it needs. In return, those people become small owners of the company and may earn profits if the company grows. Why people buy shares? People buy shares to become part owners of a company and earn money if the company's value grows. People buy shares to become small owners of a company and benefit from its growth. Investment grows. Earn profit. May receive dividends how prices change. More buyers right arrow price goes up. More sellers right arrow price goes down. Stock prices change based on how many people want to buy or sell a company's shares. Share prices change because of demand and supply. Demand means how many people want to buy a share, and supply means how many people want to sell it. If more people want to buy a share than sell it, the price goes up. Buyers compete to purchase the share, so they are willing to pay a higher price. If more people want to sell a share than buy it, the price goes down. Sellers compete to attract buyers, so they lower the price. Profit. Profit is the money you earn when you sell something for more than you paid for it. Profit is the extra money you make after selling something at a higher. Example, buy a share for 100, sell it for 150, profit rupee 50. Formula, profit equals selling price minus buying price. Loss is the money you lose when you sell something for less than you paid for it. Loss is the money you lose when you sell something for a lower price than you bought it. Example, Buy a share for 100. Sell it for 80. Loss equals rupee 20. Formula: loss equals buying price minus selling price. Risk: risk is the chance of losing money because share prices can go up or down. Risk means there is a chance of making a profit or losing money when you invest in shares. Example: if you buy a share for 100, if the price rises to rupee 120, you make a profit. If the price falls to rupee 80, you have a loss. Prices can go up or down. Learn before investing. Fun fact: millions of people buy and sell shares every day. Thousands of companies are listed on stock exchanges around the world. Most stock trading happens online using computers and mobile apps. People invest for many years to grow their money. By buying a share, you become a small owner of a company. The stock market helps companies grow and gives people an opportunity to invest and build wealth over time. Summary: stock market is a place where people buy and sell shares. A share is a small ownership in a company. Companies sell shares to raise money for growth. People buy shares to invest and earn profits. Share prices change based on demand and supply. Investing has both profit and risk, so always learn before investing. Key takeaway: the stock market connects companies that need money with people who want to invest and grow their wealth. Thank you.